Hello, my name is Troy Eckard, and I'm the CEO of Eckard Global, which is headquartered out of Richardson, Texas, which is a suburb of Dallas. The reason for the presentation today is that in the evolving shale plays across the United States, there seems to be a lot of different value propositions from one shale play to another. In particular, our company's been heavily involved and very active in the Williston Basin, which is primarily made up of Montana, North Dakota, and the Canadian Rockies. What we want to do today is take about a 5-minute presentation to explain to you, the viewer, some of the values that we see in owning minerals, acquiring working interest positions in exploration, and producing properties up in the Williston Basin, and what that really means in long-term value. Bearing in mind that there's really two reasons why an investor wants to be involved in energy. Forget the tax write-offs. Everybody knows they exist. They exist whether you drill a dry well or a good well, and it doesn't matter where the well is located, as long as it's a oil and gas well drilled in the United States. What we want to talk about is value. We want to talk about how those values are derived from owning minerals, specifically in the Williston Basin, in the Bakken and Three Forks trend that we are so actively involved in. Two things that you want to do when you measure participating in a very active play. The map you see that I'm pointing to here on the wall is essentially a map of North Dakota on the western side of the state. Everything you see in red represents a previously drilled horizontal well that has been drilled for one of the many formations that exist within the Bakken trend. Primarily, most of the red horizontal identifiers represents a horizontal well drilled into the Bakken formation. Two ways that I look at making money, or you should look at making money, when it comes to exploration or participating in a mineral interest such as the Bakken. One, cash-on-cash return. The ability and the desire to deploy a certain amount of capital and how long it takes for that capital to be returned. Is it 24 months, 36 months, 60 months? What is that evolution of your dollar? But there's a real hidden intrinsic value that exists in the Bakken that most, and probably I would say the majority of you who watch this video have no concept or true realization about. And here's what it is. In this particular basin, everything from the southern end down what they call the Pronghorn Field all the way up into the Canadian border to the north, everything in this area represents one large buried bathtub. It's kind of a sunken basin. But in that basin is stacked multiple layers of formations that are isolated and trapped and that can be produced individual from one another. There's a hydrocarbon bearing zone, a small interval that's non-hydrocarbon bearing. You continue to move down the basin, this thing is just stacked layer upon layer. When you own minerals in most states, most of my career I've been involved in Texas, you essentially have leasing rights that gives you a specific depth and a specific right depending on which formation you produce in, whether it's an oil well or gas well, and you have all kinds of constraints on what your rights are for future development. In reality, that's not fair, in my opinion. It's not fair to the mineral owner that you can own interest from top to bottom and not develop it fully, but it's also not fair to the individuals like you and I who go out and drill a well, make a mineral owner who does not have any production now successfully developing and extracting their minerals and their commodities such as oil and gas from their leases. It's not fair that we have to prove it up and then not have the right to fully develop that opportunity. So in North Dakota, especially in North Dakota and Montana in the Williston Basin, there's a unique attribute that we have found to be very, very intriguing and very valuable to our firm and our investing partners. It's the fact that the majority, probably in our case, 98% of all the mineral leases that we acquire as a lessee, we make sure that we have all depths and all rights when we take that lease. And here's why it's important. Let's take a prime example. Each one of the numbers you see on this board, 150, 149, 148, represents a township. And then going from west to east, you have a range 103 all the way to range, let's say in this case, 98. And what the state of North Dakota has done is they have developed their state in square miles. So what we want to do is we want to look at the state and say, if everything we can look at from down around 139 township, which is on the southern end of the Bakken trend, all the way to the Canadian border, if it's all essentially trapped with Bakken reserves of oil and gas and Three Forks reserves of oil and gas, we know that every one of these white spots on this map eventually will end up being as solid red as what you see where my finger is pointing. So that's nice. That's very encouraging. It's encouraging for two reasons. One, it means that we have a lot of opportunity. But when it comes to owning minerals, what it also means is it's a foot race. The first person to develop these open blocks now can, by virtue of the lease agreement that they've signed, can in fact hold all rights and all depths to those minerals, whether it be the Bakken formation or zones above it or below it, can hold the rights to develop those mineral interests in different formations in perpetuity because we have fulfilled the leasing agreement, which says, you can lease my minerals, I'll give you all depths and all rights, but what we want you to also do is we want you to drill a well and make it a commercially viable well, and you can hold it by production. So back to my comment. You have a big concern about cash-on-cash return, but the hidden value, private investors, high net worth family offices, financial advisors, private equity groups, give very little credence or value to. And that's what separates them, uneducated, non-industry experts, from the Exxons of the world, is that the Exxons of the world do in fact watch that cash-on-cash return, but what they watch more importantly is how many barrels of oil that are recoverable can they trap for every dollar spent. Now watch. If I go out and take a lease in one of these townships that is basically 36 square miles, and I lease and participate in a single Bakken or Three Forks drilling of a single well, it's going to encompass approximately 1,280 acres, 2 square miles. If I have a lease that has all depths and all rights, and I pay the going rate, which is to be $3,500 up to $18,000 per acre, when I run the mathematics on the cost of drilling that first well along with what it takes to acquire that lease, I need about 225,000 barrels of oil equivalent to pay out my investment, to pay back my lease money and to pay back the cost of drilling that primary well, completing it and putting it online. About 50%, let's say 40 to 50% of the cost of that exploration opportunity is tied up in leasing rights, the minerals. To go out and lease and buy those or acquire those mineral rights is about 40 to 50% of the cost of my project. Where the Bakken comes to an advantage, and where you as an investor need to understand what Eckard Global does that virtually no other company that I know of. I don't know of most of the companies that you hear on the radio and that you see all this internet activity. All the ones that I've looked at clearly are offering their investors the right to participate in a single well and having only the rights to the wellbore, only the oil and gas that comes out of that one wellbore. The fact that that well established commercial production and now allows those minerals to be held in perpetuity, what I've seen so far, and probably 100 out of 100 packages that I would look at, hypothetically, they're all retaining, they being the promoter, the issuer, they're retaining the rights to that lease for themselves. They're giving you, the investor, the right to pay 100% of the cost, but they're only giving you the right to what's coming out of that one single wellbore. What Eckard Global does is we see you as our partner. So when I come to an area that is going to be developed, what we do is we offer our expertise in negotiating the best lease with the best operator, in our opinion, the areas that we believe have the highest potential of capturing the most reserves, most oil and gas recoverable reserves per dollar spent. And then what we do is we offer in our documents that you, our investing partner, who is a working interest owner, you have your pro rata share of that lease, which offers you the right, but not the obligation, to develop all minerals from top to bottom, meaning middle Bakken, upper Bakken, lower Bakken. There's 4 benches in the Three Forks. There's multiple zones below the Three Forks. There's zones above the Bakken. And when you buy that lease and you develop that first well, now, any time in the future, so long as you still have commercial production, that any development opportunities exist in that lease where a company wants to go drill another well, they want to drill 5 more Bakken wells, what it does, it allows you to participate, but instead of having to buy that lease a second time or putting those hard dollars up front like we do in the first well, now all you're doing is paying your share of drilling cost and whatever drilling management fee you have to pay to have somebody manage your interest. Now, why is that important? Let's just use simple numbers. At $90 a barrel, if I pay an average of $4,500 for one net acre, so for one net acre of mineral rights, I'm going to pay about $4,500. It could be as high as $18,000, but let's use $4,500 for my example. At $4,500 per acre, based on current drilling cost and the acreage cost, I need about 113,000 barrels of oil just to pay back the cost of the lease. 113,000 barrels. That's a lot of oil just to make back my lease money. But here's why the prices have gotten higher. The Bakken is completely saturated. The Bakken is multiple well site location. The Bakken offers 350,000 upwards of 1 million barrels of oil per wellbore. So here's where the value comes in, and here's where most folks don't quite get it. When I drill the first well, it's like buying a subdivision or real estate subdivision. You buy the entire raw land, you pay whatever price you pay, the first project, the first building that goes up has to burden the cost of all that land. So even if you get a great price for that first corner lot, you still have a lot of intrinsic costs that are associated with that property. In our case, our first upfront cost is going to be in the lease acquisition. But when that second well gets drilled, the offset well gets drilled, you can now split that lease cost into two wells. It drops to roughly 52,000 barrels of oil, 55,000 barrels of oil per well that has to be recovered for you to make your money back. And you can do the multiplier yourself. In the Bakken, what it looks like to me is we'll see somewhere between 3 and 6 middle Bakken wells, meaning that 3 to 6 wells will be drilled in the middle Bakken. We're looking at 2 to 5 wells being drilled in each one of the top 3 layers of the Three Forks, along with multiple other opportunities. So I look at it and say, all right, as an investor, Eckard Global offers me the ability to participate in the Bakken. I get to be in an area where literally every well, other than operational mistakes or mechanical failure, I'm going to end up with a commercial well in the Bakken. I'm also going to end up with lease rights with Eckard, not with the rest of the guys that are offering you Bakken interest. With Eckard, I'm going to have the right of all depths in perpetuity so long as I am an active participant. I get to acquire those rights just like Eckard does, all depths and all rights per the lease I get. So what that means is when you spend your $50,000 or $100,000 investment buying a percentage of working interest in the lease and drilling that first well, you've now built up a nest egg of opportunity based on the additional wells that will be offered. And all that happens to you, just like it happens to Exxon or Continental or Whiting or anybody else, is that front money that has been deployed quickly starts to diminish and it gets diluted because the more wells you drill, the more it effectively dilutes the cost of that lease. What we do at Eckard Global is that we track and follow the operators very carefully. We know who has the capital budgets that can afford and have the desire to go drill multiple wells per lease or per drilling unit. Remember, it's 1,280 acres. I like the first well being drilled, but I like it better when they drill a second, third, and fourth well because it dilutes my cost, which significantly improves my rate of return and my overall return on my investment because I have a lot more oil coming out of the lease by having 4 wells than I do 1. Most of you who are on this video are looking at this video, because I'm the one on it, most of you looking at this video, quite frankly, don't get it. You're always being talked to about this well's a 3 to 1 or 4 to 1, makes your money back in 12 to 24 months, and 99% of that's completely unrealistic. It's not the truth, and they're embellishing the facts. The facts are in this field is that most operators are looking for 18 to 28 months cash-on-cash return on just the drilling. Depending on their cost of their lease, they're looking at maybe another 12 to 18 months just to get their lease money back. So it's a 30 to 48 month cash-on-cash return for the first well. If you only drilled 1 well, cash it out, that's what you're looking at. What you're really looking to do is you're looking to be a serious investor and really a true energy player, is you're looking to buy that lease with the anticipation that it's going to have multiple wells drilled as offsets. So am I. So here's what we would propose to you. Eckard Global offers our investments in 2 different methods. We offer our investments based on true working interest. We have oil companies, we have publicly traded companies coming to us and buying leases, and all they want to do is buy the leases and develop it themselves. And in that case, they're looking for just good opportunities. We've been providing and doing that for our industry partners. We have also private equity investors and groups that are coming to us buying interest in these leases or buying leases outright with the expectation that they're going to end up with multiple wells being drilled and help them building a nice economic portfolio. In our PURE programs, which stands for Proved Undeveloped Resource Energy, that's just pure, meaning that it's pure, it's simple, it's purely oil, it's purely resource, it's purely a play based on low-risk drilling. What we do is we focus on buying only leases that we believe will have at least a primary well drilled, because it's coming with the proposal at the time of the purchase, or in fact, we use our last 36 months of expertise in the Bakken with over 200 wells drilled to date to figure out which operator we believe has the highest probability of drilling at least 2 to 6 additional wells within the next 24 months on a lease, which means we now have a lower cost basis. I know this little presentation is about 15 minutes long. I appreciate those of you who have watched it. But the fact of the matter is that information is power. Knowing who you're investing with is incredibly strong. You're going to get pitched a lot of heat. You're going to be told a lot of things that are not true by those who want you to believe just because it has the name Bakken associated with it. That's really great. But my whole purpose of doing this video today is to remind you of 2 things. The Bakken is a great cash flowing asset, but it's the first asset I've seen in 30 years when I can buy a lease, have a 98% probability of a commercial well, and have the rights to retain leasing rights and development rights from top to bottom in perpetuity. I can't find it virtually anywhere else that I know of in the United States. So Eckard Global is a company that knows what we're doing. We're inviting you to consider being one of our partners. I appreciate your time watching the video. We'll have a sequence of videos like this over the next 6 months, which will help with everything from fracking to leasing. We appreciate your time today. We wish you the best of luck. Whether it's Eckard Global or somebody else, remember the United States needs money in our own energy policy and our own energy investments, and we encourage you to be active. Thanks again and have a great day.